What's up, guys? This is PrimeFlex, and I'm back with another massive strategy. This strategy, I'm going to call it the two-in-one strategy. It works for both boom and it works for crash. When I mean boom and when I mean crash, I mean boom 1000, boom 500, boom 300, crash 300, crash 500, crash 1000. All the boom and crash assets, trust me, this strategy works for everything. It works for everything. And if you have watched the live trade in the beginning, trust me, that is just one of the numerous trades I've taken. I don't want to add a lot of live trades just to not to make this video too long, but trust me, I have used this strategy and I've made a lot of profit using this strategy. I've been demo testing and I've used it on my live account as well, and it has been giving me wonderful results. I love using indicators such as this, the CCI, the MFI, the DMACA. I love them better than the RSI and the stochastic because they give a far much better stable signal. Okay, and this in this strategy we are going to be using two indicators. I love keeping my maximum number of indicators to be 2 or 3. I don't like my charts being messed up, as you all know. So this strategy, we are going to be using two indicators. We are going to be using the moving average and we're going to be using the CCI, the commodity channel index. Okay, I have had a few strategies using the CCI, and if you want to check them out, you can check them out on my channel. Okay, but this one is going to be different. This one is the best. Okay, the best strategy I will ever give to you. Trust me, this is the best. So far, you follow the rules and you stick to it, and you have a plan. Okay, if you have a daily compound plan that you can follow, or you have a weekly targets that you're trying to meet, or even if it's a daily target you're trying to meet, if you use this strategy, trust me, you are going to get massive results. Okay, trust me. So let's get to using this strategy. How does this strategy works? You can see right here I have the boom cell, which is some levels right here. Let me show you quickly. You see the boom cell, you see the sell, you see the take profit, and let me show you for crash, just to show you that I'm not joking. Okay, there is a parameter for everything. Okay, you can see the crash buy as well. You can see that crash buy, see the crash buy, and then we see more buy. Okay, and then we see take profit. There's a take profit level for both boom and both crash. Okay, so how do we use this strategy? First off, I want to tell you this strategy works better for the 1000 series. Okay, it works better for the 1000 series, but it works for everything. Okay, it works for everything, and I'm going to be telling you how to trade everything so you can have numerous choices to choose from. Okay, so let's get to using it. For boom 1000 and boom 500 and boom 300, this is how you use it. We have a trend filter, which is the black moving average. It is the 200 exponential moving average, which is it is a very common exponential moving average. And then we have the what? So we know that when the candles are below the moving average, it is signaling a downtrend. And when we are in crash, sorry, I don't need a chimoku. And when we are in boom 1000, we are looking to buy. We are not catching any spikes here. Okay, trust me, we are not catching any spikes. We are just taking the little candles. And the best thing about little candles is if you have a target, trust me, it is better trading little candles than trading trying to catch the spikes. We know when the candles are below the moving average, it is in a downtrend, and we are looking to sell in boom 1000, boom 500, and boom 300. So how do we sell? You can see here we have some levels here. We have the 120, and we have the 200. Okay, we have the 120 and we have the 200, and we also have the 300. Okay, we also have the 300, as you can see. So we have the 300, 200, and 120. So now, how do we use it for boom 1000? For me personally, I really don't like using the 120 as it is not a very strong level, but you can back test and see how better it is for you. But I prefer using the 200 and the 300. So how do we use it? We want the market to spike below the moving average. Once the market spikes below the moving average and it spikes above the 200, so it can either be the 200, it is either touching the 200 or the 300. So far it is above the 200. Like this trade right here, you can see it is above. It spiked above the 200, and the candle is still below the moving average. So we are going to be waiting for the close of a candlestick. So you wait for the close of a candlestick, and after the close of a candlestick, so we wait for the close of this candle, a red candle, to signal a downtrend. And after the close of a red candle to signal a downtrend, we are going to be we're going to be entering the market at the next candle. So we are going to be entering the market at this point right here, the beginning of this candle that my arrow is pointing at. How many candles should you take? So you entered at this point. So Most times I go for the level 120 as my take profit, and sometimes I go for the level 0 as my take profit. So I either go for the 120 as my take profit or the 0 as my take profit. But if you are trying to make this a full strategy, trust me, just have a take profit zone, a particular take profit zone. Okay, either you are using a candlestick amount of candlestick as your take profit, or you are using these levels as your take profit. If you are using these levels as your take profit, you can use the 0 or the 120 as your take profit level for boom assets. Okay, so for me, I use the 120. So if I had entered here, I would have been closing my trade at the 120. Sorry, I would have entered here and I would have been closing my trade at the 120 once it crosses the 120. So that means in this case, I would have been taking just 3 points of the market. That is 3 candles. And most times I use 0.5, so that is $1.5. That is $1.50 done for this trade. That is it. Then I move to the next trade. You can see this is another trade because the candles are below the moving average. You can see it goes above the 200 level, and then I'm going to be taking my trade. And when I'm taking my trade after this candle, I'll enter this next candle, and then I'll take it to the 120 level, which is going to be around here, which is 2 points. And you can see I've taken my 2 points and I'm off the market. I'm waiting for more signals. You can see this one is for the 120, and it works for the 120 as well. But like I said, I love using for the 200. So you can see right here, it touches the 200, goes above the 200, and you can see the sell. It goes above the 200, and you can see the sell. Okay, you can see right here as well, all this are happening below the moving average. You can see, let me give you another signal. You can see this one shots up to about 300 level, and if it goes above the 300 level for boom assets, use your 0 level as a take profit, as it is a stronger indicator. Okay, use your 0 as a take profit. So you can see right here and right here, the market spiked to the 300 level, and you can take the sales to the 0 level, okay, to give better profits. Okay, but if it spikes to just the 200 level, just make sure you are using the 120 as your take profit level. Okay, so this is not a trade you'll be taking, because the spike, even if it crossed the 200 level, the spike went above the moving average, so you wouldn't be taking this trade. Okay, so let me show you for boom 500 real quick. So this is for boom 500, and it is the same process we are following. Okay, we want the market to be to go to the you can see right here, as soon as you take your profit on the 120 level, the market spiked. So that is why I told you to always use the 120 level as your take profit level. Okay, and boom 500 is a very erratic market. You can see there are more spikes, and the red candles are not really definite. There's no definite trend on boom 500. It is always going up and down, spiking anyhow. So you have to be careful with boom 500, but it also works on boom 500. This is another trade right here. This is another trade right here. As you can see, I'm showing you a lot of trade right now. This is another trade right here. I'm trying to tell you, I'm trying to convince you, to tell you that the strategy works. Okay, you can see this one didn't touch the 200 level, so we would not be entering this trade. This trade is a wrong trade. Okay, so let's see, this is not a strategy, this is not a signal, and there are just lots of signals for you to get. Okay, you can see right here, this one is not a signal because the spike went above the moving average. This is a signal right here. As soon as you take your profit on the 120 level, you can see the market spiked up. So you have to take note of the rules I have mentioned. Okay, make sure you follow the rules to the latter. Okay, I have not seen any loss so far since I've been showing you guys signals right now. I haven't seen any loss. Okay, so let me show you for crash 1000 quickly, for the crash market. So this is for the crash market right now. I'm in crash 1000, and for the crash we are going to be using the 200 as well. Let me just delete the 190. We don't need the 190. We're going to be using the 200 as well. So this time we want the candles to be above the moving average for crash 1000. So once the candles are above the moving average, then we are waiting for the market to spike below the minus 200. Now for the boom assets, it is 200, but for the crash assets, it is minus 200. Take note of that. Okay, so you can see right here, this is a spike. The market spiked down, and it is still above the above the moving average, and the market touched went past the minus 200 level. So we would have been taking this trade after the close of a green candle, and then we enter at the next green candle, and then you can see the market went up. So you can use, most times for crash I use the zero level for all my take profits. Okay, I use the zero level. Okay, because crash is less volatile. Okay, crash is less volatile, and for you to get more profits you have to target more candles. Okay, so this is another trade right here. You can see the market spiked and it's still above the what, above the moving average. It went below the 200 level, and then you use your zero level as your what, as your take profit. You can see that. So you can see this one as well. This is another trade as well. You can see that, and it went up. Okay, so that is just how the strategy works. You can see right here too as well. See right here, and the market what went up. Okay, so the signal, the strategy works just as I've been showing you since. You can see that the strategy works a lot. It works a lot, a lot. It works a lot. Okay, it is better. It is far better than the killer strategy. Trust me, it is better than the killer strategy. And this is another. This, okay, this is not a trade. Let me see if I can show you one more trade example. So we can move to crash 500, and you can see right here the crash buy. It is above the what, above the 200 moving average, and you can see the way the market went up. Okay, so you can see another one right here is a back-to-back signal. You can see as the market went up. Okay, so let me show you for crash 500. I've shown you over 20 signals now, no losses. Trust me, if you follow the rules, if you stick to the rules and you follow the rules, trust me, this is going to be a very profitable session, very profitable signal for you. Okay, this is our first loss, you can see, and it happened on crash 500. Okay, that is why I told you the signal is what, it is more it is more profitable in the 1000, because for 500 the spikes are what, they are very erratic. See the spikes, see the way the market just keeps on spiking. The market is always spiking very much on crash 500. Okay, the spikes are very unpredictable, very unpredictable. Okay, so you can see right here the market gave us a loss. I would have taken our loss, and we would have what, we would have left the market in and wait for what, wait for another one, another signal. See this signal right here, and you can see the market, what, the market went up. You don't have to catch, you don't need to take all these candles. Okay, you don't need to take all the candles. Just have a profit target and stick to your what, stick to your profit target. We wouldn't be entering this trade because it is what, it didn't go below the 200 level, the minus 200 level. So this is the one we'd be entering. You can see, and the market went up. Okay, this as well, the market went up. How many signals have I shown you now? I am not even counting anymore, and we've had just what, just one loss on in the market so far. With how many signals? Can you see this as well? Can you see? And it's what, it went up. If you are using 3 candles, you would have taken your profits and you are out of the market. Would you have taken this one? I think we would have taken that. For me, I would have taken that and taken my targets even before the market spiked. Okay, because I always have a daily target. So most times my daily target is $3 or $5, and then I can use one lot and enter 5 times on my account. And once I hit my daily target, one trade can just hit my daily target and I am done for the day. Okay, I can just have one trade hit my daily target and I'm done for the day. So I always have a daily target. So once I hit my daily target, that is it. I'm not trading anymore for that day. Okay, I'm not trading anymore for that day. And I advise you, if you have a very small account, you want to make sure you build it as you don't want to build it as fast as you can. You want to build it as consistent as you can. Okay, you want consistent profits. It is an investment. It is first, is not a get rich quick scheme. Okay, so you have to make sure you have a target, you have a plan, like a business plan, an investment plan, a daily growth. Okay, so that is it. Let me show you the indicator settings. So you click on moving average. This is how you set your moving average. I'm sure you are very aware of these settings right now, and you click on done, and then our moving average has been added to our charts. And then we will click on the F button again, click on main charts, and you look for commodity channel index. Okay, once you see commodity channel index, you click it, and this is it. Period is set to 20, typical price HLC/3. And then for the levels, this is how you should set the levels. You can take a screenshot right now. Okay, so That is it. Then you click on done, and that is it. It has been what? It has been added to what? To our chat. It has been added to our chat, as you can see. So that is it, guys. Thank you for watching this video. Thank you for the support and thank you for the love. Prime Flex is out, and Prime Flex says bye bye.